Hey, my name is James Nicholson and welcome to my YouTube channel. In this video, I want to talk about the benefits of an interest-only mortgage. You see, there's lots of different types of mortgages, and most people on a residential property, the house that you live in is a repayment mortgage. But on a buy-to-let, or in some circumstances on residential, you may have something called an interest-only mortgage. Now, you also have a scheme with the government at the moment called the Mortgage Charter, where you can move your residential mortgage onto interest-only mortgage for 6 months to help you afford your payments. So I want to talk about all the pros and cons of this, which one you should have, and it will give you a clarity on how interest-only mortgages work. Now, before we jump into this, as always, if you haven't done already, do subscribe to the channel over there and hit the bell notification. We're on the way to 25,000 subscribers, which is crazy. And while you're here, smash like, tickle like, do something to that like button. That really helps me with the YouTube algorithm. It means you're an all-round great person if you do it, and I really appreciate it. So, interest-only mortgage. Let's show you the difference between the two types of mortgage first. So, if you have two different types of mortgage here, this one being residential, which is what most people have. Now, let's just say you owed 100k, and the standard term of a mortgage at the moment is 25 years, although you can get 40 years, but most people do 25. And what happens is you start owing 100k, and over time you start paying it off. And by the end of that 25-year period, you don't owe any money to the bank and you own your home outright, which is great. Now, interest only is, as the name suggests, interest only. So what happens here? So you got 100k, and over 25 years, you still owe £100,000. Now that worries people because you've still got 100 grand in debt. But what's on your side here is inflation. We don't normally talk about inflation, but we do at the moment. The last 2 years we have, but for decades before, people weren't really interested. But you would say when you were a kid, I remember when a can of Coke was 10 pence. Or my first job, I earned £3 an hour. That's my first official job, working at Burger King. Comment below, I'll be interested in this. Comment below, what was your first job and how much did you earn per hour? My uncle was a photographer, and in the 70s he earned £10 a week in that job. So times change, right? So 100 grand today is a lot of money, but in 25 years, it probably will be the average annual salary, or close, right? Or close. And so what you can do when you get later in this mortgage is you can flip it to a repayment and start paying it down, or maybe you save the money. Or if you bought a 100 grand house, on average they double every 10 years. So that property would be worth maybe around 250k, right? So you could sell it, pay down the 100 grand and keep 150 in the bank. Now, the benefits of this are the monthly payments will be significantly lower. So let's just say, roughly, this one might be £500 a month, and this one here might be £200 a month. So £200 of this is going towards the interest, and £300 is going towards paying down the debt. This one here, you're only paying the interest, so the debt is staying as it is. Now, why would you do this? Well, as a buy-to-let investor, 90% of mortgages that people get for a buy-to-let property are on interest only. We're not concerned about paying the debt down because we're looking for cash flow. So let's just say we made £600 in rent on a 100 grand house, which is not 600k, it's £600. That's achievable. I've got property in Doncaster. It's worth 100 grand. And I get 675, so that is realistic. But let's just say I only got £600 and my mortgage was 500 because on a repayment, I'd only be making £100 profit. Out of that £100, I've got to pay tax, I've got to pay repairs, I've got to pay a estate agent, I've got to pay insurance. I'd be losing money. But if I'm earning £600 and my mortgage is 200, I've got £400 gross profit in order to pay my tax, pay my insurance, and keep a little bit for myself. Now, I'm not going to get rich doing that, but I am going to get some cash flow. And what then happens is I'll get capital appreciation. So over a period of time, that property will increase in value. Now, it depends on area. Some places in the north might not go up and double every 10 years. The south, that's more likely to happen. But you can pick areas in the Midlands, or there are areas up north that this does happen. Or you can find a property where you also add value, and then you can create more equity that way. But what we're hoping to happen here is over time, this 100 grand property goes up in value. So in 10 years, it should be worth 200k. In 20 years, it should be worth 400k. Now, does that happen everywhere? No. But it does happen in a lot of places if you buy in the right area. Manchester, for example, is a northern place that does have good capital appreciation. Dorking, where I invest, has good capital appreciation as well. So the benefits are keeping more money in the bank, right? Keeping more money in the bank and allowing time to give you capital appreciation that you then, in the future, you could either flip it onto a repayment mortgage like this and start paying it down if you want to clear the debt, or you could sell it and you could take out your profit. If I've got this 20 years later and the market did double twice, I've got 300 grand in equity in that property. I could sell the property, pay the 100 grand. Obviously, I'll have to pay capital gains tax, but that's just part of doing business. So that's why we want, as investors, to really look at interest only. And in fact, the bank will encourage you to have an interest only mortgage. If you don't, the numbers probably won't stack up. And rather than just putting in a 25% deposit, you might have to put 50% in there in order to make the numbers stack. Any buy-to-let deal that you do, the bank wants to make sure that you're making profit on it. They're not going to lend on a loss property. Like, for example, if you're not getting enough rent to cover the mortgage and make yourself profit, they just won't lend you any money. So that's the benefits of interest only. It's a great way to leverage your money so you can borrow more, you can have a capital appreciation on that property, and also you've got cash flow in your business, and that's what you want as an investor. Let me know any questions, thoughts, or comments below. Would you have that? And the last thing actually is, right now there's something called the mortgage charter. And so because of the cost of living crisis, any residential property can go to their bank and say, I want to move on to interest only for 6 months. That's an awesome thing. That allows you to cut your payments down, and you can save that money that you don't have to pay to build yourself a little pot of money to save for a rainy day. Or if you do decide at the end of the 6 months, look, you know what, I didn't need this, you can always pay it back and pay off the debt that you have. So it's a mortgage charter. Go and check it out. It's definitely something that's worth doing. While you're here, smash like, do subscribe, check out some other content on the channel, including this video right here.